Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 19th of December, 2017, and it's about 4:10 p.m. Central Standard Time. So we were down in the gold and the silver today, pretty stable in the copper and the platinum. Now, I think the copper got a real good piece of news. China is going to, in 2018, step back a little on the tightening of the credit that they've been doing. They're willing to let more credit out in the market with control to keep the economy on the pace they want it to grow at. So that's a change. And normally changes like that are bullish, the base materials, copper, silver, items like that, and of course good for their economy, good for the world. Crude oil probably gets a little bit of a bid from that as well. Other than that, we have the tax bill passage today, but it's really not a passage. Let me explain this. The House of Representatives approved the bill. They voted on it. It passed. It went to the Senate, who's already begun debate on it, and the Senate only gets 10 hours of debate. That's what it's limited to. It can be shorter if senators give up their time. Assuming that passes, there's a parliamentary procedure that was thrown out, so the bill, regardless, in fact, assuming it passes in the Senate, goes back to the House tomorrow. There'll be a quick vote, and I mean quick. It'll pass again. Count on that. And they're going to get this thing onto the president's desk so fast they don't need any more problems. They want to deliver their Merry Christmas. So that's what I think you're looking at. Could all this be upset in a way that I don't know? Of course it could. But one thing I did hear when I was reading, I'm going, wow, it passes the House, and now it's got to go back to the House because of a procedural mess. In looking at stocks, you broke down on the news, not that it didn't pass. You know, there's an element here of buy the rumor, sell the fact. We've been buying the rumor of a tax bill easily for the past 4 weeks, going to get done by Christmas. It's now right in front of us at Christmas, so there's a sigh of relief. You're not looking at a major sell-off. You're looking at a sigh of relief, and that's what you're dealing with. But when you get to the metals, the question will be, if money goes back into people's pockets starting in February, and if corporations really start bringing in money and do a certain amount of hiring, giving back also a big chunk of funds to their shareholders, but still using some of that money, will it create inflation for 2018? And that's probably going to be the question gold has to ask itself. Right now on the weekly chart, you're in a downtrend. You stay that way till you get over the 1300 level on this particular formation of closes only on a weekly chart. When you come to the daily chart, you can see how the market slipped down, and from 1241.70, it's already gotten up roughly $22, $23. Resistance is back at 1268.20, only $4 away. So certainly within striking distance. You can see how this chart looks, but as a chartist, what would you call that? And unfortunately, the swing line is just calling it a bounce. Could this negate the downtrend? Absolutely. If the market were to take out 1271.80, $7 away, you'd end up with a pattern of lower highs. But guess what? That high would then take out that one, so you'd have a higher high and a lower low. So right now it's lower highs. Take out 1271.80, you'd have the higher high and a lower low. Not the start of a trend, but the end of a downtrend. When you take a look at today's action, I want you to look at the 18-day average of closes. Look at where the market stopped. Today's numbers high was 1268.60. We hit 1268.20. I just view it as a bounce in a market that is still bearish. The market did bounce away from the lower Bollinger Band. They're starting the curve now, one down, one starting to come up. So I expect more sideways action. And momentum is lost the embedded reading. And what do I tell you? When you lose an embedded reading, it is not uncommon for price and the 18-day average to make a run at themselves, assuming this is the closest main average, not the 100-day. And you tell me what happened. That's exactly what the market did. When I come to the CBOE futures of Bitcoin, people don't realize, I haven't heard a word on it. Last night at 2 o'clock, we were at $1,950. Today at 3, we got to $17,250. And I'm not hearing a word about it. I guess if it's not soaring, it's not newsworthy, but it should be. Since the exchanges are developing more and more volume, we are starting to see to a degree that the market is finding it easier to fall than it had been. Is that tied together? I don't know. Is it easy to go short? It is not. Are most firms still letting you trade Bitcoin futures? They are not. They want a history of it. They want to know what kind of risk they're getting involved in. And seeing today a $2,000 drop in a matter of hours on a contract that was 19.5 down to 17.2, you can understand why no one's going to low margins. It's just too risky. So looking at the gold-silver ratio, 79.35 down to near 78, and a little bounce today. You can see that the GDL, which is, I keep putting ETD, that's ETF, my error, that's a typo. Daily bar chart. I think it's going to try to rally to that 18-day average and run into resistance there the way that you've already done in GDX. Here I spelled it right. What can I tell you? It's Christmas time. Too many eggnogs. Look at how the market's going right there. Momentum up. You've run into a brick wall. Could you get a bit bullish here? It wouldn't be hard. Let's see what happens. What you don't want to take out is 2180 if you're going to try to develop something to the upside. Now in silver, you lost, here's an embedded reading. You lost the reading here last Friday. When you lose the reading, I often say, in fact, I practically always say, expect for a price to try to make a run to the 18-day average. What happens is they both try to move together. Here's the market trying to move yesterday. You tell me what it went to today and where the brick wall was. Same as in the gold market. In the copper market, this has been what we call a vertical rise. I'm beginning to understand it. Somebody knew that China was going to ease up on the credit. If you don't believe that these statements just come out in the press and somebody didn't have their hand on it, great. The market smelled something. I can never tell you what, but you've gone straight up from 295.95 to 315.15. I don't know that I'm right on what I'm saying. I've got 45 years. I suspect people in the copper business that were close to the Chinese might have known something. Do I know it? Absolutely not. I'm guessing. And that's all it is an educated guess. And that's what it looks like. Let's talk about trend. Where would you buy this market and put a stop? That's the first question. Well, if you're going to put a stop under the most recent low, your risk is 20 cents, or is that $5,000? Bye-bye. Enjoy your run. In the platinum, look where the rally stopped, back at the 18-day average. And you're out of a trend. You have a pattern of a higher high, which you developed a couple of days ago, and a lower low. You're back to what I call that neutral zone, that line in the sand zone where the market's trying to figure out what to do. The palladium market gained a little bit back today. It's still in an uptrend until it takes out 10,000. It looks like 10,000. Let's get the exact number. 10,635. Yesterday's low. If that's taken out and the market closes under 1004, could develop actually a bearish trend very quickly. Dollar index, interesting day. Lower highs, lower lows, and a close under the 18-day average. The trend turned down today. You'd have to take out yesterday's highs to reverse that one way or the other. Let's talk about, in front of Christmas, my charting course. I want you to write this information down. If you type in the word XMAS when it comes time to buy the course, if that's what you want to do, you're going to get $30 off the price of $109.95. Nothing goes out by mail, so it doesn't matter. It's all online. The charting software you're going to download. The chart itself, the videos, you're watching them online. There's no disc coming in the mail, none of that. So this is timely. If you wanted to give it as a gift, you can. All you need to do is tell us, and we'll start the course, turn it on when the person's ready to go. If you're the one that wants it and you say, hey, I don't want to be bothered over the holiday, but I want to take advantage of the price, we can do that for you right now. You're going to learn 5 of my favorite technical indicators, the swing lines, a number of moving averages, not just the ones that I use here. You're going to learn my tricks of slow stochastics. Next, what you're going to learn is the Bollinger Bands, how to work with these and my different tools for working with them. And then, of course, something I don't show here called window envelopes, a profit-taking tool. It will end up with charts looking like that, but then every morning you come in, I make a recording. Off that recording, I review 40 charts with you. I give you trade ideas for the day, not like I do here. In those videos, I am able to say, buy here, sell here. Take profit here. Move your stop like this. I do an awful lot in it. So, $79.95, it's a heck of a lot better than a sweater. Give us a call. You can always go onto the website under the word education, or right here you can click if you're watching me on YouTube, and it'll bring you right to the page with it. There's a FAQ page, answers all your questions, and away you go. I'm Ira Epstein. Have a great day, and I'll see you tomorrow.